Today is Saturday, the 14th of January, 2023. We always start with our disclaimer, go over our calls, and make some predictions for when the market reopens. Also, because it's the weekend, we take a new look at the longer-term picture. Please take some time and review the rules of my channel. If you find the channel helpful, it would help me if you could go to Amazon, look up the MEJT system, my book, and make a comment that you've seen the system work. And please remember, all my calls can be wrong, and any trade you make should be at your own risk. On Friday, we looked for the pattern with the early low, which is this, and when the market reopens on Tuesday, we're looking for a pattern with an early high. I didn't like Thursday's action. I said unless we gapped and promptly overtook the high of day, we should have a straight line drop, which is what we got. We hit a MEJT target, 39.6386, and that printed. So all that worked. What we didn't say was the market would have a recovery and overtake this high and kill the idea that this high was going to stick. Any break needs to have confirmation, and certainly we did not get confirmation on Friday. We have a new MEJT target for Tuesday, 39.8125. If we don't gap up smartly, that's my call. If we do gap up smartly, which is entirely possible because day-long rallies on Fridays almost always follow through, and it's quite negative if they don't. But if we do gap up smartly, the number stays, but not the time. During the day, MEJT said this drop was not for keeps, it would retrace. Now says the rally is not for keeps, going to retrace to this line. We have a number of things which are compatible with a high in this area, although they aren't really pinpoint indicators. We have numerous sentiment indicators, such as the low volatility index, put to call ratio, and position of funds in the RIDEX funds. But I can't make this high stand from an Elliott wave count perspective. So we have to find some other place, some other price, and some other time where this wave could end. Now the general idea is that the October low is going to hold. The whole bear market's over, that we've seen wave 1, and that we're in wave 2. We've completed A of 2, we're in B, and at some point, we don't know where, but it shouldn't be too far over this 200-day moving average. At some point, we're going to retrace, have red C of black 2, make a low, and then be on the way up the rest of this year. That's my idea. So let's see where we are in this wave. Let's talk about the time first. A number of people whose opinions I respect had some highs coming in last week. They gave me the reasons. Certainly I thought they were reasonable. They did not work. I have some other people whose opinions I respect who have a high coming in towards the end of this week. I don't want to copy their stuff, but I'm not taking anything unusual if I look at the square of 9 dates, because those are from Gann. They've been around forever. If you take a square of 9 date from last year's low, they come up with a Saturday date for a possible high, which would be either Friday or Tuesday. And if you measure from last year's high, you come up with Thursday. So by this methodology, which comes up with the same date as these other people, late this week, perhaps early next week, we have a reasonable time for a high. As far as price goes, the 61.8% retrace didn't work. Next logical place is the 78.6. Doesn't mean it has to retrace 78.6, but I can make it work if we do. That price is around 4028.96 cash. If that works, you have an ABC down for good fibs for A. You have an ABC up with good fibs coming in at the same price. So A, B, and that would be C. And these waves all check out. All the internal structures check out. So let's look at this possible price just under 40.29 on the long-term chart. Well, here's about 40.29. If you take the height of wave red A, and if B ends in C starts around this line, which is around 40.29, you come up with a low of 36.92.5 for the end of wave red C. And if that works, you can look at the last high we made. And you'll see, if you measure from here to here at 61.8, you'll see the same price around 36.92.5 is the Fibonacci target of the prior consolidation. So I like wave counts to look pretty. That one looks pretty. Just because it's pretty doesn't mean it works. But at least it gives us prices where we can be on the lookout for the beginning and end of wave red C. These are next week's patterns. Tuesday's pattern has a really high. We could still get down. There is a lower MEJT target. Unless we get up smartly, the rules call for it to print. We rallied all day on Friday, and almost always that's going to follow through when the market reopens, so it's entirely possible we do gap up. Sentiment indicators such as VIX have been and are at levels compatible with the top in this area. I can't come up with a good wave count which says the rally's ended, but there is wave balance in the high 4020s cash. A number of timing systems of other people call for a top this week without success. The next time period I've seen is towards the end of next week. I continue to believe this bear market's over and that after one more drop we should see higher prices the rest of the year. So we have a pattern with the early high. We have a lower target. We have a possible time and a possible price for the end of this move, following which I expect to see a very sharp drop, and then the fun begins on the upside. And that's today's call.